What do you think is happening here?
Good evening and welcome to another live market overview with myself, PumpeyeTheTraderMan, and my esteemed colleague, Bilo the former bear. Good evening, Bilo. How are you doing? Good evening, Bilo. How are you doing?
I'm good, thank you. Just want to let you know that you are cutting out again a little bit.
Okay, that should be resolved now. I think it's just to do with when we're transitioning through scenes.
Okay, so hope everybody's doing well despite the sluggish market and the uncertainty. Definitely not fun. So we're going to try to give you a little bit of insight as to what's going on and what to expect. We'll look at both bearish. Unfortunately, we'll start with the bearish this time, and possibly bullish scenarios. We'll look at a little bit of on-chain analysis. And I will answer a question that YZ asked in the chat, I think, regarding leverage ratios. So we'll get started, guys. What we always do is we zoom back to the beginning of Bitcoin when it was not worth anything. And we look at a grand cycle. The grand cycle for Bitcoin is a 1, 2, 3, 4, and it seems like this was 5. Because this retracement is too much for this to have been a 1, 2 of wave 5. Because if this was a 1, 2 of wave 5, and let's say we're going to bounce sometime soon, we'd be looking at targets for wave 3 of 5 to be at the 97K level, and then at 125K level or so for wave 5. I suppose it's possible, and that would be the bullish scenario, but given the dimension of the waves, they kind of have to be a little bit proportional, and this would just make wave 5, the 1, 2 of wave 5 to be a little bit unproportional. So I'd be surprised if this is what's going on. So to me, it just looks more likely today. And I was ready to have called this a 1, 2, 3, 4, 5, but this decline is just too big for my liking. So to me, this is a 1, 2, 3, 4, 5, ending with the all-time high in November, and we've been at a decline since. Typically, after 1, 2, 3, 4, 5, we have a correction in ABC. There are many forms of corrections, of course. ABC's the most the simplest form of correction is an ABC. Inside of an ABC, you can obviously have many different forms of corrections. There could be triangles, there could be flats, extended flats, combinations. So for now, we'll just leave it as an ABC and try to find out where this ABC could end and why these targets for the C are viable. So we'll go into a zoomed in chart where some of this work has already been done. And we'll look at the 4-hour chart. Now we've posted this, been posting this scenario for a while, simply because actually, just go back here a little bit. For me, and you may remember during one of the Zoom live overviews we did a few months ago, this dropped to 41K, just really screwed things up on many levels. We weren't supposed to go lower than 48 for this continuation to continue happening. So we have a 2-minute. This is literally a 2-minute candle, guys, a 10K 2-minute candle that just liquidated a lot of longs. A lot of longs got liquidated here, similar to what happened back here in May of 2021. So this made the count more complex. We tried to get out of this a few times. We tried to make the case that, okay, this could be the accumulation for Bitcoin, similar to what happened here. We did point out that there were, you know what, it was different. It didn't look much like this. And guys can go back and look at the YouTube videos, and we'll have mentioned that they just don't look the same. There's many aspects of this that just doesn't look the same. And so we've continued down, and we're continuing down. We saw a little bit of excitement and euphoria last week where we were hitting 39Ks. We again cautioned everyone not to get too excited because unfortunately it did not look like a proper true rally. And what makes a good rally? What makes a good rally is volume. So in the absence of volume and a green candle, you get what you're calling a divergence, a bearish divergence in this case. So it's really that simple. So if you ever see a green candle, a big green candle, but very little volume, essentially what's happening is there's not enough power and momentum behind that pump. Could be a fake out, could be manipulation, could be whatever. It's not going to be sustainable because RSI, MFI, different indicators are just not showing you that momentum and strength in the market. So it's not time to be longing the market when you see those kind of green candles. And I'll show you the examples and what we were referring to a couple of weeks ago and last week and whatnot. So if we go back and just take a look here, a couple of days ago, today's the 3rd, on the 1st, I posted a chart in Crypto Society in the TA channel that this here, to me, we were about to go down. And we'll get to why the target is where it is and the possibilities for the target. But let's focus more on why this was an area where, we had reason to suspect that we would go down. So if you look at the daily, and we zoom in a little bit here and just review the daily. Oops, excuse me. Just zoom in on this triangle. And this triangle, guys, it's a correction, essentially. So it's a retracement of wave 3 up to wave 4. My theory is this was wave 3, this is wave 4, and the bearish scenario is we're heading down into wave 5. And the reason why I felt that this would happen is because if you look at the daily and you look at the price action here, and you look at the value of RSI, and then you look at where we reached here, and the value of RSI was higher. And there was a big gap. So if you guys understand divergences essentially is when you see as an example, you see a lower high on the price action, but a higher high on the oscillator, on the RSI or on the MFI. That means essentially that there's bearish divergence, and it's a sign that we're about to drop. But aside from that, from an Elliott wave perspective, this is a very clear ABCDE triangle. So if you follow up on what is an ABCDE triangle, it's at the bottom of a correction, or if you're going up, it could be 1, 2, 3, and then wave 4 is a downwards bullish triangle wedge, but it'll also have an ABCDE to it, and then it'll break out. Well, in this case, it's the opposite. It's an upwards pointing wedge, which is a bearish wedge, and we have a perfect ABCDE, and you know what? We dropped from there. Doesn't mean that this is going to go all the way down. I'll get to why these are reasonable targets and what they are and why we reach those targets. But it's important to just try to understand why this point where people were getting excited and we're reaching 39K levels, where it was a dangerous place to get excited and people were going to get hurt. So it's essential to understand divergences, guys. I think that the biggest, most important tool you can use in trading, and it's not hard to grasp, is divergences. And divergences differ from time frame to time frame. So when you hear people say, I want to see how this candle closes, essentially what they're telling you is, I want to see how the candle closes relative to the candle before it. So we're looking at different candle trading patterns, or they're telling you we want to see if bearish or bullish divergences are occurring. So of course, there's a lot more tools in the arsenal and a lot of different TA methods to analyze what's going on. But these are very simple methods that I find pack a lot of power given how simple they are to understand and to use. So if we get to the bigger picture, back now to the assumption that we saw the all-time high being wave 5. So what we see here is essentially an A and a B and then a C, okay? So the key is, okay, you know what we see, but how do we target where C is going to end? So, you know, you can analyze this. You can go look at it in the TA channel. If you have questions, you guys can just ask me. I'll be more than happy to answer. But just so we can not waste any time, an ABC is a correction that, in an ideal world, is a one-to-one. So the A to B in dimension and size is similar to the size from B to C. So when we say it's a one-to-one extension on Fibonacci extension, we're essentially doing 1-to-1 from B. So this entire thing here, so if we, you know what, if you want to just draw it out, this here transposed from where B is gives you a 1-to-1. That you see here, it's 1. Okay, that's all it means, guys. It's sometimes, you know what, fancy words and stuff, and you guys maybe don't know what it is that we're referring to. It's really that simple. So when we're talking about a Fibonacci extension, you're extending a particular price movement from point X to point Y and transposing it from a pivot point, in this case, B, which is at around 52, 53K. So if we start doing a count on Elliott wave for, assuming this was, you know, A, B, and then now C, we know that A is a 1, 2, 3, 4, 5, B is an ABC, and then C is another 1, 2, 3, 4, 5. If I do the count here, I have 1, 2, 3, 4, and now I'm trying to find my last wave. So in trying to find my last wave, I gotta go one level deeper and start analyzing wave 5, which also consists of 5 waves. So it's 1, 2, 3, and here's my 4. Here's where everybody was getting excited. But don't forget, if you're doing a count and you're following the count, the upwards movement in a downtrend is just a correction. Just like when you're going up, sometimes you retrace down, people freak out, think it's the end of the world. It's just a correction. And depending on which wave you're in, you'll be able to tell if, you know what, it's time to get out or it's time to get in. So in this particular case, this was not a good time to get in a long position unless you're playing this retracement. So you're saying, okay, I'm getting in here, I'm getting out here, because you know eventually it's going to continue back down. So, you know, trading is a lot. If you're trading day to day, they become very important factors to consider, the counts and the different, you know, signals and stuff. If you're looking at the big picture, it's not so important, because essentially you just want to know that there's an ABC. You want to be able to target the end of this so that you can decide where to get in. Or if you're shorting and you believe that this is really a bearish count and it makes sense, and you have a conviction that we're going to continue down because there is a 1, 2, 3, 4, 5 here that has to, you know, come down somewhere below 3. Well, this is why a lot of people would be shorting the market here, especially breaking out of this bearish wedge, which kind of confirmed here that we broke out of it. We could very easily say, okay, but what if I do this? Now it becomes, you know, a smaller bearish wedge. Okay, what if it drops to here? Now it becomes a channel. You know, the point at which people are going to say enough, it's here. Is once this line reaches approximately 35.7, depending on the time frame, and we break below what could be the channel, at that point, there's not much more to kind of make you feel better. We're broken out of the channel. So we can have a channel breakout, we could have a wedge breakout, which we have right now. It doesn't really matter. The important thing is that if we do a wave count and we see clearly we have 1, 2, 3, 4 waves, there's a 5th one coming. You know what? It's very rare for wave 5 to be truncated. Truncated means it's less than wave, well, in this case, more, since we're going down, wave 3. So at the very, very, very least, we're going to be headed back towards this 32.8 region, in my opinion. I hope I'm wrong, guys, because I don't have, you know, I would like the market to go up. I didn't sell, you know, all my assets. I didn't sell all my coins. So I have zero interest in seeing the market go down some more. However, it's important to realize that the potential for the market to go down is higher right now, today, than the potential for it to go up. Now, why do we choose these targets? I have a big box here. I mean, it's a big difference. And I say this in the TA that I posted in CS. We're looking anywhere between 32 and 25. The reason for that is the ideal target for this 1, 2, 3, 4, 5 is 32. But the ideal target for this the big ABC with a 1-to-1 is 25. Okay. And 28.9, if you recall, is right here, which is the last time we tested this region was in the in May, June, July of 2021, where we had the Wyckoff accumulation. So we have three very important points. We have 32, we have about 29, let's say 30, there'll be a psychological level at 30. And then if we break below 28, 27, we'll see a very fast decline to 25. We break 25, guys, it's not going to be good. I think there will be serious panic in the market, but I also think there's a shitload of buy orders here, waiting, praying for people to capitulate enough that they can buy Bitcoin at 25K. So I personally, I would say, and this is not financial advice, I have to say this, I would say that I'm 99% sure we will not see anything, but if we go below 25, and I don't think we will, but if we get to that region, we'll see an extremely long, quick buy-up wick, bottom-facing wick. I mean, there must be, and there are a ton of orders here, I'm sure. The other reason to look at this from another bearish perspective, and there are plenty, is there's a very clear, ugly, what do you call these things? Head and shoulders. So you know what? I'll just draw it in another color so you guys can see it clearly. What color do you like? Here, blue.
Isn't the target for the head and shoulders somewhere around 20 or 19?
Yeah, it's even lower. So if we do the target of the head and shoulders, we're heading towards like 15, 14, whatever. You know, so there's really like there's a lot of reasons from a TA perspective to see this chart as quite bearish. Another thing, okay, we were looking earlier at the big picture, right? Going back to the weekly. So if this entire thing is a 1, 2, 3, 4, 5, and this was the top, after the top we have a correction, an ABC. But as I mentioned earlier, there are many different types of corrections, ABC being the simplest ones. There's something called a flat. There's something called an extended flat. There's something called a combo. So you can have an ABC here, followed by another 1, 2, 3, followed by another 1, 2, 3, 4, 5. So corrections, and I've said this many, many times, are very complicated and unpredictable. And I don't think anybody out there, I don't care how good they are in Elliott wave analysis, can tell you where the correction is going to end. They could give you targets because there's liquidity, because there's buy orders, because there's support, because of many things. But Elliott wave-wise, trying to predict a correction is extremely difficult because you could predict A, B, C. Okay, here, you know what? The target for C is between here and here. No problem. But what if there's an X, Y, Z after that and another A, B, C after that? Because that's how corrections occur sometimes. So you know what? You go crazy. So if you simplify it and you just do a Fibonacci retracement from day 0 to the all-time high. So I'll just find my way to $0 here. Let's say, it's close enough. Okay. And I do this. We're at like 50% right now. And 61.8%, which is the golden pocket, the golden ratio, is at 26. And the number below it, because I like this area here rather than just sticking to 61.8. I like this area here. Some might tell you they like at 2.705, whatever. Okay. But my point is, there's a lot of confluence here to say that there would be a big bounce in this region. If you've listened to us before, you would have heard us say several times that in a meaningful time frame, and this is certainly a meaningful time frame, we're in the weekly, Anytime you're above 618, you know what? 7 times out of 10, you'll bounce. And anytime you're below it, 7 times out of 10, you'll get rejected. Maybe it's even more than 7 times and 8 times out of 10, because everybody's looking at these values. It's not something magical. It's not because, there's a, some sort of cosmic force that makes people want to buy at those levels. It's just because everybody looks at these levels as important levels, and therefore they become self-fulfilling prophecies. It could be anything. It could be that, anytime you get close to wave one, everyone's going to buy. Why is that? It's because it's just mass, the masses will do that. Elliott waves said, Elliott wave theory set apart that you can't go below wave one. But you know what? Why can't you go below wave one? Elliott wave didn't make the rules of trading. Elliott wave theory, it was based on market psychology. So if enough people will buy here, well, then it becomes very improbable that we drop below this point. So that's basically how it works, guys. It's not magic. It's not some sort of cosmic thing. It's just it's if enough people do it, it becomes meaningful. So sure, this does not look great. It doesn't make you feel like this is almost over. We don't really know. It could be quick and like tear off the band-aid kind of thing, and we have a huge sell-off and then we bounce and everybody goes back to life. Or it can just drag and drag and drag and take a little bit of time. It's hard to say right now, really is. One thing is that the on-chain analysis, which has usually guided me personally a lot, has been very disappointing. I was telling Pumpy earlier today, when I look at on-chain analysis, and I see that, why is this? Hold on, let me just refresh. CryptoQuant changed their website a little bit. I prefer the old one. Anyway, so this is very behind. Why is that?
We are all resistant to change.
Yeah. Oh shit. Okay, hold on. I gotta sign in.
Everybody look away.
All right, here we go. So, yeah, there we go. February 1st. So look at this, guys. I mean, in the past, when I would see the price come down, and we did this here. Remember, Pumpy? Around that time, yeah. we told everybody, we're like, Jesus, look at this. Price is coming down, but reserves are also dropping. So Bitcoin reserves, guys, all it is the amount of Bitcoin that is being brought in to an exchange, like Bitfinex, Binance, FTX, whatever, versus the amount that's leaving. So in this particular case, when you're looking at this blue line and you see it coming down, going back up, coming back down, what it's telling you is there is Bitcoin that is flowing off the exchanges. So how do we interpret this? Well, if Bitcoin is flowing onto an exchange, the most commonly held belief is that price is going to dump. But you can't really draw that conclusion, because you can put Bitcoin on an exchange just in case. Doesn't mean you're going to sell. It just means that you're worried that there might be a sell-off and you want to be ready with your Bitcoins to sell them, because if they're in cold storage, there's not much you can do with them. So you bring your Bitcoin onto an exchange and you're just hoping nothing happens. That's one reason. Another reason could be that you want to use them as in derivative trades. You know what? Longing, shorting. You don't need USDT. You could use perpetual futures contracts with the crypto, with BTC. So you could actually be bringing Bitcoin onto an exchange to long BTC. Okay. And then obviously the obvious reason is you could bring it onto the exchange to sell it. However, when you look at Bitcoin leaving the exchanges, the only conclusion you can draw is it's not available for sale.
Hold on, Bilo. Can I
Sure.
stop you there?
You can.
Now, what is to say that these exchange reserves aren't getting lower because a lot of the Bitcoin is being sold OTC?
No, it doesn't take that into account. Because when you're selling, it's how do I put this? When let's say you're exchanging Bitcoin with somebody else. You're doing an OTC deal, okay? Think about it, take it further. So I sell you my 2,000 Bitcoins, okay, in an OTC deal. Okay, no problem. But if I sold them to you, are they in your exchange wallet or are they in your private wallet?
They're in your private wallet.
Okay, but then it's an outflow from an exchange to a private wallet, right?
Yes.
Okay, but now if you take that Bitcoin and you bring it back onto an exchange, isn't the net effect going to be unchanged?
Not if it doesn't. Not if it's not going to be brought back onto the exchange.
Okay, but the point is, it's not on the exchange. Whether I sell it to you or I keep it and I don't put it on an exchange, it's supposed to be a bullish thing because it's not available for sale. That's the only point I'm trying to make is if it's not on an exchange, it can't be sold in a manner as to affect the market. Because if it's an OTC deal, it's not affecting the market. And the only way to affect the market is to sell it on an exchange. So whether I keep it on an exchange, sell it to you in an OTC deal, if you keep it in the wallet on the exchange, well, this is not going to affect the chart. If you put it, if I send it to you in a private wallet, yes, it'll affect the chart because the amount of reserve is going to drop. But then if you bring it back onto the exchange, it's going to cancel my previous transaction and therefore won't affect the chart. But that's not what we're seeing. We're saying this is the net. This here is the net. This is not just amount leaving. This is telling you all this is leaving. You know what I mean, Pumps?
Yeah, I get it.
So anyway, the point is that we're seeing lower and lower Bitcoin reserves, okay? So with Bitcoin reserves being so low, you would think, rightfully so, that the powers that be, the big whales, the institutional buyers, investors, are not too concerned that this is going to be a huge dump. And this is what led a lot of people, including myself, to be in disbelief that we were going to continue down in these regions. So, like, unfortunately, in trading and investing, whether it's traditional or crypto or whatever, if everybody knows something, it's no longer valuable. So if everybody has learned now to do on-chain analysis and decide whether to buy or sell based on this very basic information, the only conclusion that I have to draw, unfortunately, from this is that this is basically a game that's being played with us. So they're removing, you know what, they're doing this, they're removing Bitcoin off of exchanges, but there's still enough on the exchanges to dump the price and to make people lose hope because it's going against every single indicator that's out there. That could be a theory. I mean, I don't know. At the end of the day, we know there's manipulation, and you can't be smarter than manipulation because manipulation is very arbitrary. There's no, it's always manipulated this way. Today it's manipulated this way, tomorrow it's that way. Could be, reverse psychology. So you can drive yourself absolutely crazy trying to figure this out. But if you agree and if you believe that there is manipulation and there are clubs, groups, I don't know, for lack of a better word, clans that get together that have a significant amount of the Bitcoin that's out there that can sway the price and manipulate it. I mean, you could get lucky or you just go for the ride. And unfortunately, right now, a lot of people are just going for the ride, hoping that this is going to end soon and just, trying to mitigate their losses as best as they can. So this used to be a great indicator, just hasn't worked very well lately. And I think people are going to, at least for the near future, stop relying so heavily on this to kind of figure out what was going on. I love this indicator. I mean, this was my favorite on-chain indicator, and it worked very well in the past. Just hasn't been working ever since, what is this? Since November. Just hasn't been working. Either that, or the only other explanation is the big guys aren't worried, but then there's capitulation from the retail market. People, people that bought here and are freaking out and just selling. That could also be it. And we'd have to go into deeper on-chain analysis, and we could tell, looking at the Glassnode, that the short-term holders are capitulating. Yeah.
Well,
so
I've been hearing quite a few places that actually the whole of the last pump from when we went back up after the Wyckoff distribution and accumulation has been futures based. So, I mean, that could have something to do with it.
well, listen. So YZ today in the chat asked us to explain a little bit estimated leverage ratio, and it's really very simple. The higher that ratio is, the more people are in leveraged positions. And right now the ratio is quite high. It's like 0.21 or 0.22 or whatever, something similar to that. And whenever you have a leverage ratio that is high, you're going to definitely have more volatility because people are in high leverage positions. Why is there volatility when people are in high leverage positions? Well, it's simple, because of stop losses and liquidations. So when you're liquidating somebody's portfolio who's at 100x on, let's say, one Bitcoin, that's a shitload of money. And if it's not just one guy, it's 100,000 people all at the same time. This is where you see these crazy spikes in volatility. So yeah, the higher this indicator, estimated leverage ratio indicator, the higher it is, the more volatility you will have in the market. And in this case, if you look at funding ratios, and funding ratios on different exchanges are different, but for the most part, right now, funding ratios are negative. What does that mean? When funding ratios are negative, it means that the shorts are actually paying the longs to take on open positions. Because for the shorts to make money, longs have to get wrecked. So they're giving longs incentive. I mean, I hope nobody enters a long just because the funding ratio is negative, because we're talking about peanuts. It's like, I don't know, 5% APY like per year. It's not, you know what, on a 1 day position, it's nothing. But the point is that the majority of the open interest right now is short. It's bearish. So somebody pointed out the other day that this could be indeed bullish because if the majority are bearish, then because there's manipulation, these people are going to get wrecked, because that's the obvious position to be in. So again, we're getting into psychology, we're getting into mind games, we're getting into reverse psychology, beyond my scope of expertise. I mean, I don't know. Honestly, nobody does.
One of the other things, Bilo, on leverage, the game has changed now, because previously you were able to get 100 lev, 100x lev, everything else like that. But most of the exchanges have reduced that down to 20 max. So what's actually happening is when they're doing short drops, the cascade effect isn't happening as quickly because you're not liquidating the 50s, the 60s, the 100x's. You have to actually drop it more to activate the 20s, the 10s, and everything else. And people are actually getting a little bit smarter. So the amount of leverage is increasing, but the way to trip the leverage is decreasing.
Makes sense. Makes sense. I don't know which exchanges have dropped, but I mean, Binance still is at 100. I think Bybit and all those guys are still 100. Even I think Binance for Bitcoin is at 125, actually. 125x. I mean, that's just crazy. Yeah, sure. You know, like 125x, just keep it round numbers, 100x, okay? Let's say that you have $10,000 in your funding account, in your futures account. If you go all in at 100x, I mean, you will definitely get liquidated. I mean, you would have to be so lucky as to have caught the beginning, if you were short, of a massive dump in order not to get liquidated. Because a little bit of movement to the upside or the downside at those leverages, if you're all in, you're over. It's over. I mean, it's pure gambling. It's like flipping a coin. You know what? You have more chances winning flipping a coin. But the smart people, and you know what? It's an unfair statement. The smart and wealthy people, and I'll tell you why the difference is there. Let's say that they have, I don't know, $100,000 in their leverage account, and they go on at 100x at 1,000. They can afford to wait it out. if they just expose themselves with $1,000 position at 100x, and they have $100,000 in their account, so they're using 1% of their account to go 100x, and they have a reasonable conviction that they're going in the right direction because they're good at what they do, TA, whatever, these guys have a good chance of winning. But you see, the key is to risk a small amount of your portfolio. And why do I say that you have to be wealthy? It's because if you only have $1,000 and you risk, let's say, what's 1% of $1,000? It's not much. So even if you're right with your 100x, you're not going to make that much money. So yeah, people don't get that. People just go in and they hope for the best, and it's very easy to get liquidated if you don't have enough money in that account. Very easy. Because and you'll see it, and especially in futures trading, if you follow the price movement in futures trading minute to minute versus spot trading minute to minute, you will see it's different. It's not the same. Leverage trading, you'll see that the price will go up, 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 down, 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 up, 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 down, down. It'll try to wipe out everybody on top and everybody at the bottom that are heavily leveraged, and try to liquidate them. It's like going target hunting. It's crazy. So yeah, I really don't recommend this to anyone that's not very experienced and at the very least has enough money to offset their liquidation price in their account. Because you know what, if you're close to liquidation when you enter, you're most likely 99.9%, unless you hit the minute that a cascading effect in either direction happens, then you're extremely lucky. Aside from that, you will get liquidated. Financial advice. All right. So yeah, guys, it doesn't look great right now. Unfortunately, I wish I could. Just doesn't look great for me right now. From account, like I said, I feel like we need to see that 32 as a minimum before people start to feel a bit better. And if it holds, maybe we'll see a nice bounce. If it just bounces around here and then continues down, it's not going to be very hard to evaluate, to see ourselves back at this 28, 29 level. And if that fails, we'll meet here. I mean, there's not much more to say. Now, I promised you a bullish scenario. I started with it, I think, even though I didn't intend to, but the bullish scenario is we can't go below this point. That's the bullish scenario. Unfortunately, because you know what, you could say to yourself, okay, you know what, this was the end of a wave. We did this. Well, we still didn't get back down here. So this could be 1, this could be 2. As long as we don't go below here, we're still, and it's true, it's still a viable 1, 2, 3. That's the only bullish scenario I can present. And as long as we're above this, we could be in an upwards movement. But just so much points to the bearish scenario, unfortunately.
You're just making me feel so much overwhelming FOMO, Bilo.
Yeah. I wish I could say more. I really do. I don't want to see this bearishness. I don't want to see And of course, look, I mean, 33, 30. You really believe if we're going to come back here? I don't know. I mean, where's the support? There's no support. What's holding us up right now? Let's see. You see, like this entire region, okay, from where we are right now, just starts to go down and down and down the further we go. So the highest support is above us as we speak. This region may be down to 35. We're still kind of okay. And then we jump down to 34, and then we jump down to 33. And then, yeah, just be careful, guys. You know what? I'm not telling you go short. I'm not telling you I'm just telling you, be careful and be aware of these important levels. Yeah, and from a wave count, to me, wave 5 is not over. RSI to me was clear we were going to drop here. That's why I posted it, saying we're going to drop. And in terms of targets, it's going to be more market sentiment than anything else. If people feel satisfied that this is the support, great. But it seems to me from listening and reading, people don't feel this is going to be it. So if people don't feel this is going to be it, what makes something go up is when the buys overwhelm the sells. That's how something goes up. But if there's not enough people with conviction that this is the bottom, there's not going to be that much demand. So the sells are going to overwhelm the buys, and the buys are going to be lower, and that's what's going to drive the price lower. So for now, suffice to say that it does not look great. Could change. For me right now, it doesn't look good. Yeah, sorry. Now, to give you some good news, since Dave is on the line, Ethereum Dominance looks great. Dave?
Yep, big smiley face.
Are you happy?
Always.
Look at Bitcoin's dominance, and then look at Ethereum's dominance. See the difference? Like it's like a polar opposite. You see that? Ethereum?
Yeah, I think it's showing the flow of digital oil, as they like to call it, into Ethereum as well.
Yeah, absolutely. So that's interesting. It's interesting because, I mean, there is this narrative that Ethereum is the true stablecoin eventually, the stablecoin, excuse me, bad word, store of value. I would love to see Ethereum being a store of value. There's an actual use case to Ethereum besides being rare. So we'll see. We'll see. 2022 is a mystery so far. That's about it for me.
Be good one for you to Luna if you didn't do it, because I know I missed the first part.
Oh, I didn't do it, but because it's you, I'll do it. Luna.
Ouch.
So I don't remember what I was doing here, but
not selling enough Luna, I think.
Take that away. Just take it all away. Okay, Luna. So it would be kind of cool to see us hug this previous channel that we broke out of, came back, tested, came back down, and it would be kind of cool to see us test it. I know there's a lot of doomsday scenarios for Luna out there because of USD. Maybe Dave, you could talk a little bit about it, but I don't know. I mean, if people are worried about an asset, for sure, you know, there could be problems with its price. But I don't know if these fears are, how founded these fears are. I haven't really followed up on this. Anything you want to say about this, Dave?
Yeah, I think it is. It's the human psyche again, isn't it? It's the rumor. Now there is some stuff in there about how does it hold its peg. So for anybody that listens or is watching, that the way UST actually comes about is they burn Luna to create UST, and they balance it by allowing the actual UST price to drop, or not allowing it. If the UST price drops, then they make it more valuable for you to go and buy UST by changing it for Luna, and vice versa. And the reason they do that is it keeps it roughly to its peg. You'll see it drop and come down. I think last week it maybe dropped to 98 cents, but it's quite a good mechanism. One of the big issues, I can't even say it's FUD, just information, was that the pools with the Anchor protocol were being drained really fast in terms of the APY at 19.53%, I believe it is currently, and they were having to top it up. Now, to me, that's not as such to do with UST, that's to do with the Anchor protocol and how you actually get additional value out for if you're staking the UST. So as soon as that information came out, I actually started buying back into Luna. This isn't financial advice. This is just what I've been doing. And I sold my last Luna stacks that I trade with previously a few weeks ago and up until the back of the year. I sold mine between 63 and 72. And I know it went above 100. I was like, did I do the right thing or whatever? But patience. I kept telling myself this, and it came back down. Not because of Luna or anything else. It was just luck, but patience paid off. And then I started buying back in again about 61, I think it is. And I got the lowest down about 40, 46 or so. And I've been averaging down and buying back in. And the reason I'm doing that is, one, because every time that you buy UST, a little bit of Luna is burnt as part of the transaction, very similar to ETH. So it becomes almost a deflationary. The other thing, if people didn't know, is that actually the treasury for Terra Luna was converted from Luna to UST. So there's I think it was several billion that they actually converted. So that created a big burn as well, and that's what helped some of the pump that happened recently. And because of the narrative with USD and USDC, and are the Fed going after it because they're centralized stable coins, the decentralized ones for UST, I think, are going to grow. And there are others out there, not just this one. And I just keep buying Luna to be able to flip it in and out of UST. And my UST bag is increasing. And for me, Luna long term is a really good play. Short term, as we've seen with what happened with Bitcoin, it can just crap the whole market. It doesn't matter whether it's a good coin or not. Bitcoin can make everything else shake. It doesn't help. I popped into the chat as well, which is outside of crypto. It doesn't help as well that Facebook took an absolutely almighty shit earlier today, and it dumped 26.3%.
A lot of tech stocks, not just Facebook.
Yeah, it was driven by Facebook though, because they missed their target. And that in itself as well has rippled out into the cryptoverse for the metaverse, because it's meta. So
you use the word rippled on this.
Oh no, I know I mentioned a shitcoin.
Next thing you're gonna say ADA.
Don't do that to me. It was a mistake.
So what everybody wants to know is, are you back at your 10,000 Luna stack or not?
I would have never been anywhere near a 10,000 Luna stack.
Come on, Dave. It's okay. We're all friends here. We're just poor people on this life. It's not that.
Right. It has a 0 in my stack, but it isn't. It isn't 4 zeros. I can tell you that. It's maybe 1 0. But no, I'm using the Terra space because there's a lot of developers in there. I think if people follow the Coin Bureau for what they've been going through as well and showing, it's had the most new full-time developers added to it in the Terra Luna space. So as the actual coin itself, I'm holding now a permanent stack of those, and I've gone to restake them myself. I forgot about those, and I've got a trading stack as well, and I've got a medium-term stack. So if things get to a certain point, I'm perfectly willing to take a 15% hit. And if it goes below that, I'll just sell it and go into UST. But at the moment, I'm just adding to bring my average down. So I'm in about, I think my average is now 49.9 or something on my medium stack, which isn't bad. And DTA is your friend.
There's a new project that you should be investing in. It's called the Pumpilo Metaverse project. Just send us your money.
Yeah, that's not happening.
Yeah.
Because I keep getting rug pulled by the missus. So she sees what's in my wallet and pulls it. So
safer with Pumpilo Metaverse.
His money is being converted into a handbag.
That happened last year. So and it actually did. So yeah, for me, I'm keeping multiple stable coins. So this is not just so Luna's the greatest thing in the world. Like everything in what we're doing with investing in crypto, you're better to spread your bets across the space. So UST, USDT, your Paxos, Gold, BUSD, anything that's actually backed by something that isn't just trash accounting. So UST USDT is backed by debt, there's going to be a pretty big crash. That's going to go to shit. There's probably going to be a big run on it. So I'm keeping very little myself in USDT. That's my own advice for me, not for anyone else. USDC, it's a little bit better, but it's still backed by shit. If you go to BUSD and Pax Gold, that's backed by something that's a bit more fundamental, i.e. gold. And then UST, if it keeps its peg, it's completely decentralized, and it should stay around there for me. So I've got four different stables at the moment, but in multiple different pools. So also, if you're doing for staking, if one of those pools gets an exploit and gets drained and you're not insured, you at least have other pools and you haven't lost everything down the hole either. So there's insurance that's out there for other areas. If you've got significant amounts, and significant can be $500 plus, I would advise people to start to look at about insurance as well, because an exploit can wipe you out. That's me.
A huge exploit yesterday or the day before with Wormhole.
Yeah, on Solana. Yeah, that gave it a kick in, didn't it?
Yeah, Solana's been getting some very negative press lately. Well, not negative press, but I mean just bad things happening to it, which incurs negative press. Anyway, all right. Always love and enjoy your insights, Mr. Dave.
I'm glad someone does.
Yeah.
Most people say I'm full of shit, but
I don't agree, and I don't agree for 1 minute with Pumpeye. He doesn't think you're that smart. I totally disagree with him. You know?
I agree with Pumpeye, to be fair. So you're the wrong one here.
It's still nice to have other people talking on the videos, even if it's Dave.
Yeah.
To be fair, you called me a person. Please take that back.
Sorry, Dave's missus's pet.
All right, guys.
Handbag
Always
supplier.
Airbag.
Airbag. Indeed. So,
okay.
Thank you very much, Bilo, and thank you very much,
Thank
Dave.
you.
Thank you very much, Meow, for joining us. And I think that's everyone this evening. It would be great if you could like and share the stream, and you could come and join us again next time we're live. Bring your friends, because there's
give a bit more notice next time as well. I missed it.
Well, we did. We put a post up yesterday, and then for personal reasons, I couldn't do yesterday, so I put a post up saying that it would be tonight instead. And we got to that point of 8 p.m. CET this evening where we were meant to start, and it was just me and Bilo, and that was it. Meow joined us, and then you joined us, which was great. But yeah, obviously, the more the merrier.
You need to tell my PA next time.
Excellent. Right. Thank you very much, guys. Thank you very much, Bilo.
Have a nice evening. Good night.
Indeed. Thank you very much, Dave. Thank you very much, Meow. And we will see you next time.
Thank you, Pumpeye. Bye.
Cheers all.